Okay, traders, welcome once again to this weekly Forex forecast. This is Btcusd speaking for Lazarus Capital. Okay, traders, without wasting our time, let's just jump right into the analysis for this week. I'll be taking you through my trade plan for the coming days, and also share some insights as per what happened in this week. So guys, let's jump into the charts. As usual, we'll be starting with the Bitcoin. As we can see, the Bitcoin is still hovering around. Remember, I told you guys that this trade plan is going to take time. I've seen it and I know it is going to take time. So in this game, patience is the key. And also, if you are a 4-hour time frame trader and you were able to stay away from the market this week, I want to congratulate you, because this week market is a very crazy market. It's only those who are professional, who are patient enough, that can escape, the ups and downs of this week. Because this week the markets are just going up and down, no clear direction. And guys, that is one thing you need to understand as a trader. You must know when to stay away from the market. You must know when to stay away from the market, because your major duty as a trader is capital preservation. It's not to make profits. Your first major assignment is to preserve capital before you think of making profit. And this week, I don't know for the lower time frame traders, but as you as a 4-hour time frame trader, this week is not a week you should have even attempted any entry, because it's a week full of chaos. I'm hoping that by the new week we're entering, there will be order, because one thing the market does is that before there is order, there will always be chaos. There will always be chaos. The chaos comes before order. Do you understand? Before the calmness, there must be a chaos. If there's no chaos, the market cannot unsettle people. The market cannot, make people FOMO. The market cannot make people to be fearful. It is the chaos that brings this, emotional roller coaster ups and downs. Traders begin to leave their trade plan and do something else, because they are tired of waiting. Their emotions have been triggered. So you must learn when to stay away from the market. And this week, market for a 4-hour time frame trader, because here I trade the 4-hour time frame. The analysis I'm doing here is for the 4-hour time frame. So for a 4-hour time frame trader, this week is not the right time, to take any trade. So if you have gone through this week by sitting on your hands, I want to congratulate you, because you have saved yourself from a lot of headache. You have saved yourself from a lot of stress. So I hope that the coming week, that the market will begin to, give us some clear direction, so that we can begin, to take some entries. And if it doesn't give us our entries, we'll wait till the following week. We must keep waiting. It's not, you must wait for your entry. Well, you must wait for your A setup. Okay, so like I told us that I'm expecting to sell the Bitcoin from this area. That trade plan still remains the same. The trade plan still remains the same. If the Bitcoin did not come to this resistance area at between 74,162 to 79,114 within this zone, let me zoom out. You can see this area here is where I'm expecting the Bitcoin to rise to. If the Bitcoin did not rise to this area, I am not interested. So our trade plan for the Bitcoin still remains the same. Let the price rise to this area, guys. And that is why you see me each time I'm doing, dropping this analysis, I always tell you that if the price did not come to this location or that location, I am not interested. It's as simple as that. I don't care whatever the market is doing. And it is when you have this type of mindset, that is when you can really overcome this market. Because as a trader, you cannot control the market. The market will do its thing. The market will do how it pleases it. The only things you can control that can really save your account and save you a lot of headache is your decision. You only have control over your decision, your emotion, and your risk. Your decision, your emotion, and your risk. That is the three things you are responsible for. Every other thing you are not responsible. The market will do its thing. You cannot control the market. The market will do whatever pleases it. So whatever the market is doing here, no, it's not my business. I'm only interested if I see the market rise to this area. If it rise to this area, I look for an entry signal. I look for my entry signal. I go short. When this candle here closed yesterday, I saw the candle close, but I wasn't even moved. I said, as long as you are not coming up here, I'm not interested. So I will continue to wait. Can the market continue to push lower without coming up here? The market can. You must understand that for the fact that you do out a trade plan does not mean the market will respect that plan. The market can do its thing. So, but for me, if the market did not rise to this place, I'm not interested. It can continue to drop from here, keep going down. I'm not interested until it rises to this place. So you must get to that stage where when you draw out your trade plan, you let the market know that if you are not coming to this level, I am not interested. Whatever you want to do. Do you understand? So for the Bitcoin, the trade plan still remains the same. The market has to rise to this area in between from this point to this point. Whichever way here I get my entry confirmation to go, short, I will short the market from there. Like I told us, TP1 will be, we'll use this low here at 63,261. Stop loss at 79,733 because I'm using 2 TP for this Bitcoin. Then my TP2 will be at this level. There is a, if I take this Fibonacci from here to here, there's a weekly time frame because my TP2 is always, a higher time frame exit point. So I'm seeing a level here. If I go to the line chart now, okay, I'm seeing a level here. So my TP2 will be at this point. So my TP2 will be at this point. And if I think there's still another. Okay, let me use this also to. If I take this. Because these moves are Fibonacci moves. I take this from here to here. Or it's almost slight, as far above, below it. So I'll just exit at this point. Exit, TP1 here. Then maybe the TP2, I'll just exit here and see, how it turns out. So for Bitcoin, I'm waiting for the market to rise to this point. Take my entry from this point, stop loss here, then TP1 here, then TP2. I'll just exit at this 57,637. Maybe it might get to 50,000. Maybe the Bitcoin might get to 50,000, but I'll just exit at this point. Okay, so let's move over to the EURUSD. Okay, as you can see for the EURUSD, our trade plan still remain the same. Remember I told you guys last week that the EURUSD, I'm expecting it to move. I'm expecting the buyers to come in from this point. You see the buyers actually came in from here. And I also told you guys that when you get this entry, don't be too in a hurry to buy the EURUSD from this point. You can go and watch the last week video to reconfirm. I said it that once the price comes to this level, don't be in a hurry to buy this market from this point, because I'm seeing a level below here. I'm seeing another demand area here that the market may decide to use to move back up. I'm seeing another level here because below all these areas are stop loss. All these people trying to buy this market from here, they have their stop losses filled here. I'm thinking that the market will come to take all those stop losses out before it moves. because nobody will see all this whole lot of money sitting down here and won't want to take it. It's free money for the market. This is free money for the market. And the market will come down here. All these people trying to buy this market from here, the market will come and stop them out here and move from here. That's why I told you guys last week that if this Euro USD get to this level, don't be in a hurry, because you see this thing is very clear, and the market knows that. Yeah, we traders, we've seen that this is a support area that has been tested before. When it comes, it's supposed to move. Now look at what the market started doing, building liquidity. I'm looking at by the coming week now the market will drop out, take out all these people trying to sell this market here, and from there start going up. And let me take you guys to the daily time frame. On the daily time frame, there's another block I'm seeing here. There's another block I'm seeing here. Look at this bearish candle. It's another block. Let me remove this. Look at this bearish candle. And guys, there's one thing I noticed that the market usually does. If the market is planning to move from a level, and let's say for a bullish move now, the market is trying to move from a support area. The market is planning to move from a support area, and below that support area, and immediately below that support area, let's just say, few pips away from that support. This is like 50 pips, and some pips below that support area, there's another support that has another block. The market will rather move from that support area that has another block. This is what I've noticed about the market, and that is why it is important for you as a trader to focus on one strategy. Focus on one time frame. With this, you'll be able to understand the market. You'll be able to understand how the market moves, because when you focus on your strategy at the earlier time, it's not a guarantee that you start making money. But at those earlier time, you'll be able to understand how that strategy works. You'll be able to understand how the markets respond to that strategy. You begin to understand your psychology, how your emotions react to that your strategy. So that is why trading takes time. It's not something you can just come in today and you start making money the following day. No. Of course, anybody can make money, but it's not to make money is a thing, but to be consistently profitable. Because at the end of the day, if you don't understand the market, even when you make money, tomorrow you give that money back to the market. You understand? So one thing I've come to understand about the market is that when the market has a support area that it wants to move from, and below that support there's another support that has another block, the market will rather come and move from that support that has another block. This is the other block. This one is another support. Let me show you guys that it's a support. See this resistance here. See resistance. Resistance. It's an area that will come back to turn to a support area. So when the market gets this one above 9, is also a level that the market is supposed to move from. You can see there's a resistance here. There's one here. That is supposed to turn to support, which is what it has turned to support. But instead of it to move now, it's now playing. This is where it's coming to. It will rather move with this support that has this other block than to move with this one. But what the market usually does again is that before it will move, it will first of all engineer that area as a support, so that traders will be like, oh, this market is moving from here, and all of them will start buying. That's why you can see traders are trying to buy the market from here. And the big boys, they know what they are doing. They are also using the opportunity to load their positions. They are loading their positions because the big boys, they don't trade with little capitals like we do. They have huge allocation, and they can't just inject all this money in the market at once. If they inject the money in the market at once, the market will fly off. So they'll be putting it, batch by batch. As they are putting it batch by batch, that is when you see this build up taking place. So in the coming week, I'm expecting that this market is going to drop down to this area. This is the daily time frame. It's going to drop down. I came to the daily time frame so I can show you this other block that is here. Show you this other block that is here. This is resistance. This one I think will turn to support. So there's a support area here, but because of this other block, the market rather comes down from here and move from here. And it also give the market the opportunity to take out all the stop losses of the UPO, the early buyers. So I've been trying to, you see these guys buying this market now, all of them have their stop losses here. All of them have their stop losses here. No retail trader will take this trade from me and put stop loss here. They don't have enough account to do that. So their stop losses, most of their stop losses are here. So the market is going to come down and take them out. They're from this other block and start moving. So that was what I saw last week. That's why I told you guys that be careful. If the market gets to this level, don't be in a hurry to buy the market. Wait, because the market might come down to this level and move from this level. This is that resistance area on the daily time frame that I think will come back to turn to support. This is what the market has been doing, engineering a fake support area. It has been ranging in this area the whole of that last week. So the next thing it will do now is come down, take out all the support, trying to buy this market from here. Then from this area it will move. So in the coming week, I'll be expecting the market to come down. I was expecting the Euro USD to come down into this zone. From this zone, I'll be looking, for my buy entry. Once the market comes down into this zone and I see the buyers come back up, I will take my position. Stop loss can be below here at 1.6927. TP1 will come back here at 1.19152. TP2 will be here. Although I'm seeing another level at the weekly time frame where the TP2 might get to, but I'll just exit, at this point. So TP1 here, TP2 here. So for Euro USD, the trade plans still remains the same. I'm waiting for the market to drop down to this level at 1.17279. Once I see the market coming to this zone, I see the buyers coming, I'll take my entry TP1 here, then TP2 here. So let's move over to the next pair, which is the gold. So guys, remember I told you guys last week that the gold is also still bullish, that I will be waiting for the gold to drop down. And I told you that if the gold refuses to pull back, if he refuses to pull back, I am not interested. And it's as serious as that. You can see that last week, this week that just ended, the market was just playing all over the place. The market, was not moving with intention, and we can see that the market is still pushing upward. As I told you, as long as the market did not pull back down, I'm not interested. And guys, let me still, remind us back about the logic behind my trading. The logic behind my trading is simply, like I told us the other time, identifying a product that is in demand, identifying how much people are willing to pay for that product, and I look for how I can get that product at a cheaper price so I can sell back to those people. So that is why when you are looking at the chart, sometimes remove your eyes from the instruments. So people will be like, I only trade gold, I only trade GBP, JPY, I only trade USD chef, I only trade this. Relax. What is trading? As a business person who does buying and selling, how do you make money when you are doing buying and selling? How do you make money as a trader? You identify a product that people need. You know how much people are willing to pay for that product, and you see how you can get that product cheaper. For this product now, you can call this anything. Let's call this an iPhone. You can call this an iPhone. Let's assume I now know that people wants to buy this price at this iPhone at 5266. People want to buy it at 5,000. Let's use this. People want to buy it at 5,239. For instance, I know this is an iPhone. I know people are willing to pay $5,234 for this iPhone. If I want to buy this iPhone to sell to these people, and nobody is willing to sell this iPhone for me at a cheaper price, I can't buy it at this price. Because if I buy it at this price, if I sell, how do I make profit? What I'll be looking for is, how do I get this iPhone at a cheaper price? How do I get this iPhone around this price? If I can get this iPhone around this price, people are willing to pay $5,200 for this iPhone. If I can get this iPhone at $5,000, I can sell back to these people, and the difference becomes my profit. So that is the logic. That is the logic behind my trading. It is based on this logic I now bring in my strategy of executing. Based on this logic, I bring in my experience as per reading the charts, technical analysis, indicator, chart patterns, candle patterns, and the rest. It is based on this logic, based on this idea that if people are willing to pay $5,200 for this product, if I want to do business, if I want to buy this product and sell, I must look for how I can get it at a cheaper price. If nobody is willing to sell this product for me at a cheaper price, I cannot buy. Because if I buy, I won't make profit. People are willing to pay $5,200 for this product. If I buy it at $5,200 and I sell it back to them at $5,200, what then is my profit? Nothing. So that is why, the pullback strategy is very important for me. I want to see the price come back down. Then I know, okay, now I've gotten a discount. If I can buy at this level, I sell back to these people at this level, the difference becomes my profit. So that same idea, that same concept in your everyday life, bring it to the chart. Then on that foundation, bring in all your strategy, your indicator, your chart pattern, your ICT concept, your SMC, your order block, your fair value gap. You can see, doing the analysis of the EURUSD, I showed us another block. Other block. Now, all these things are just secondary. They are just secondary. The major thing is that this market is bullish. Yes, I know it's bullish, but I cannot buy at this level where it is. It must give me a discount. If it doesn't give me a discount, I'm not interested. Whether it's gold, whether it's silver, whether it's diamond, whether it's crude oil, whether it's EURUSD, whether it's USD Chef, the name does not have meaning to me. What is important to me is that, can I get a discount? Can I get a deal? Can I get a deal? It is the discount that is the deal for me. If I can get that, okay, this is good business. Okay, people are willing to pay $5,000 for this product. If I can get it at $4,500, I can buy and sell back to them at $5,000. The difference of $500 becomes my profit. So, for the gold, we'll still be waiting for the price to drop. For this coming week, I'll be waiting for the gold to drop. I prefer it to drop to this level. If it drops to this level, I wait for my buyers. If they come in, then I execute. And I can see that this level is a good level. You can see that this level is a good. I'm seeing a gap here also. It's a good level. There's a support here. There's a support here. There's a support here. Okay, maybe slightly up to this area. Slightly up to this area. Okay, cool. There's a support here. There's a support here. So if the market pulls back here, I get my buyers. I will buy. Stop loss can be here. 48.98. Entry can be here. It should be like 5,000 approximately. Then TP1, 5,200. Then TP2, back to this area. So for the gold, we're waiting for the price to drop. Then we'll go long. Let's move over to the next pair, which is the Nasdaq. Okay, guys, as you can see on the Nasdaq, I told us the Nasdaq among the pairs I'm trading is the only pair that is in the range, is in a confirmed range. We saw the range from here. This is the supply area and the demand area. So, and I told us that once the market is ranging, once it has left the supply area, the next destination is coming is the demand area. You know, the market does not just move straight, to start going, you know, zigzag. I told us last week that I'm expecting the USD that I'll be using the trend pullback strategy to execute this, this US 100. And I'm expecting the market to come into this area. And the market came into that area, you know, but I did not, I didn't sell this market from here. Reason being that it made this move, that was on the Thursday. It made this move on the Thursday. And when this candle closed, hold on, the market made this move on the Thursday. It made this move on the Thursday. I should have entered after this bearish candle closed. But there are other confirmation I was waiting for. But I know in this market you don't need to have too many confirmations, because when you have too many confirmations, sometimes you'll be second guessing yourself. But the reason why I didn't, you know, the reason why I did not sell this Nasdaq from here is because, first of all, I've seen that this week is kind of chaotic. I've seen that this week is chaotic. One. Secondly, I saw these buyers coming heavily, and I was expecting when these sellers come back, I don't want to be among the early sellers. If the buyers come in this strong, if these sellers come back, I want to see the buyers come back in. Maybe even take out all these early sellers, and if the buyers come back in, I want to see how far they can go. Let me remove this resistance area so that you see clearly. So I was expecting that now that these sellers come back in, these buyers that made this move, you know, all the way to the upside there, because I saw how this move came in. It was a strong move. I was expecting that if these sellers come back in, these buyers, I want to see their reaction. And guys, that is another thing you need to always wait for. When you see, you know, I told you that trading is a game of war. It's a war between buyers and sellers. So when you see the buyers coming strongly, if the sellers come and, you know, try to push back the buyers will not just give up like that. They will come back in. So I want to see when the buyers are exhausted. I want to see when they become weak. The buyers came in with a strength. They came in with a strength, a push to the upside, a very strong strength. Then the sellers came. I want to see this buyer's reaction again. In fact, at that time there was a support here. Okay, I say, yeah, okay. At this support now, I want to see this buyer's reaction from this support. I want to see this buyer's reaction from this support. If these buyers come in, if they are serious, they are supposed to create another high after this their move. But if they did not create another high and they got here and create an equal high, or they did a slight high, take out the stop loss of this support here, and they can't go further, and I see these sellers come back here, this is when I want to join this sell move. That was why I didn't execute based on this. You understand? So, and I've seen that this week is a kind of a crazy week. I'll be like, okay, if these sellers are serious, let the buyers come in and let me see the reaction of the sellers. If the buyers come in, I know if the buyers come in, they're supposed to break structure and create a higher high. But if they don't break structure and create a higher high, and they create an equal high, or, you know, they just stylishly close a bit above here, suggesting they are trying to take out the stop loss of the early sellers, then the sellers come in, that is when I want to execute. So that was why I did not execute this trade. So I can see it's like the buyers are trying to come in, though it's not looking that strong. But when the market opens, we'll see how it turns out. And I don't like using trend line, but sometimes I see the trend line traders, you know, their trend line is still holding. But this is a ranging market. I don't rely much on the trend line. Even when the market is not ranging, I don't use trend line much. So in this new week, what I'll be expecting for the Nasdaq is to see I want to see a pullback. I want to see a pullback by the buyers. So I'm seeing, you know, a good level will be around this area. Might have a good level at this area. See this resistance area here. This resistance area here. This is support that will come and turn resistance. So in the coming week, I'll be expecting the Nasdaq to pull back to this area. So now these buyers now, I want to see them coming back into this market. I want to see these buyers coming back into this market. If they come back in, I expect them to push forward, upward. But if they don't, they came here and they become weak. And I see the sellers come back at this point. This is when I'll join the sellers. This is when I'll short this market. And let me take the Fibonacci of this move from here to here and see. Okay. I have my 61.8 at this area, 5061.8 here. 5061.8 is here. 56.1.8 is here. So I want to see these buyers come back in. You can see Fibonacci, you know, is really doing a good job for us here. You can see this area here. That's the area we're talking about. So I want to see the buyers coming back in here. If they do, then I want to see the sellers. When the sellers come in, then I will join, you know, the sellers. From there I will join the sellers. Okay, let's move over to the next pair, which is the USOIL. So for the USOIL, as you can see, the analysis we did for last week is still valid. And the USOIL, you know, there's a lot of geopolitics that's affecting the USOIL. But what I'm still expecting for the USOIL, I want to see a pullback into this area. There's a support area here. I'll be waiting for the market to pull back to this area. Market to pull back to this area. From this area, I want to buy the USOIL. If I go to the daily time frame, I'm seeing kind of a gap at this, a gap below here. I see this area here. See this week here. So I'm expecting the market to draw back down to this support area. From there, I'll be looking for buy entry. So in the coming week for the USOIL, I want to buy the USOIL at this area, 61.750. TP1 back to this resistance, then TP2 here. If the USOIL did not pull back, I am not interested. If the USOIL did not come down to this support area, I'm not interested. If it decides to continue going up, let it go. I'm not interested. So for the USOIL, I'll be waiting for it to come back to the support area at 61.7, you know, 93. Stop loss below here, 60.220, and TP1 here at let's say $65. Then TP2 here. So let's do a brief recap. So for the Bitcoin, we're waiting for the Bitcoin to rise to 74,410, between 74,410 to 79. Entry will be here, stop loss will be here, TP1 here. Then if you're using 2TP, you can target 55,000 dollar per coin. So for the Euro USD, we're waiting for the price to drop down to this area, 1.17279. Stop loss below here, TP1 here, then TP2 here. For the gold, waiting for the gold to come down to this area at 49, let's say 5,000, at 5,000, TP1 here, then TP2 here. For the Nasdaq, I'm waiting for the price to rise to this resistance area at 25,099. The stop loss can be here depending on where your 4-hour time frame bearish candle closed. Stop loss should just be above the candle. Then TP1 can come here and target this week here as your TP1. TP1 can come here like I said last week. Then TP2 over here. Then for the oil, waiting for the oil to come down to this support area at 61,793. TP1 here, TP2 here, and stop loss below here. So guys, thank you for this analysis. Please, if you are trading next week, be careful. This market is a very dangerous place. So I wish you guys a successful trading week. Thank you.